I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who is an investor and the publisher of Daily Profit Cycle, amongst other things. This is the 287th episode of our weekly therapy session that we like to call Investing in Bizarro World. Bizarro World starting to be the norm out here. I might have to change the title, Nick, but anyhow, we're going to talk markets. We're going to talk what we're investing in. We're going to talk about some of the things that are working, how quickly the markets can change. We're going to talk gold. We're going to talk silver, talk politics a little bit, or politicians anyway. We'll talk China. A lot to get to as always, but first and foremost as always, how are you, Mr. Hodge? How goes it?
I was just telling my wife this week that the podcast was very aptly named considering everything that was going on out there, man. It's been, I think, 5 years or something like that, and then Bizarro World is more apt than ever. I'm doing very well. Happy fourth quarter to you and to listeners out there. I think it's going to be a busy and prosperous one. How are you doing?
I'm doing phenomenally well. As you know, we were in the Dominican Republic to celebrate a close friend's birthday, Alex. Happy belated, Alex. Had a hell of a time. The debauchery was top-notch. The resort was top-notch. The people were great. The water was warm. I mean, kind of hard to complain. So I feel refreshed. I feel reinvigorated. September was a busy month, as you know, travel-wise on the work side of it. Great to close the month out with friends and in a nice, warm, friendly, beautiful place. So no. I say that to say I'm great. The wife is healthy. The kids are healthy. Things are moving forward and things are happening in the market. Let's get right into it. I want to start with precious metals. Gold and silver, and then silver especially stood out to me today. They tried to beat it up, get it below that $32 level, was down some 2% at one point, and actually it ended up rallying and closing above that critical 32 level. And it's looking more and more to me. And again, I'm not the technician, but even my simple brain can look at a chart and go, I think 32 is going to be like the new kind of floor, because it used to be resistance, and now it seemingly gets over that every single time they try to push it back. Thoughts on silver before we get to gold?
I'm pulling your chart up right now. Let me get some candles instead of a stupid line.
Appreciate you, sir.
Yes. 31 was sort of overhead resistance for a while. It ran a couple of times to 32 in the past couple of months here. If it can, I don't know what I was telling you last week, but yeah, we just closed out the month. Let's look at that for a second. You didn't get that above 32.
Nope.
God, they really did try to get it below 31 there on the 30th, didn't they?
Yeah, they did.
Yep. And so, yeah, you need to close above 31 to stay bullish, 32, and then you're moving higher, right? And as we said last week, it's like, I got 32. 32.53 if you want a specific number. $32.53. You get consistent closes above that, you're going to go to the next level fairly quickly, I think. And as I told you, and last week, and as you were saying, the next level is in sort of the 40s to 50s, right? Because that was the last time that precious metals were at a record in that sort of 2010-11 time frame. So yeah, that's the technical aspect of it. Markets in the past week have sort of gyrated a little bit. They had time to digest the rate cut. They're now tangling with if inflation is going back up.
You mean when you cut rates and you flood the system with more money and you give that to rich people that like to buy a lot of shit, inflation kicks up for everyone else? Fuck me, imagine that.
And I have to get out my honey dish again and show you how the honey flows to the edge of the dish, just like the money flows out when the government prints it and sends it out. And that was sort of the point I was going to make. Yeah, what the signal is that, we're cutting now and we're going to be, let's say, sympathetic to monetary and economic needs, right? And so, yeah, so a couple of things. One, I think they cut prematurely. I see prices starting to go back up. Just look at a chart of a commodity index. Just look at a chart of copper. Even the softs, like egg prices, are back in the news, right? And of course, it always starts out like this. It's because of there's some birds dying, or it's because of this. It's like, no, man, it's just prices are going up. Like prices can just go up, right? And that's happening almost across the board in the commodity space. Where do I want to go from here? You also have the geopolitical and war backdrop specifically for oil, right? With the ongoing Israel, Hezbollah, Lebanon, Iranian thing. And then, so what's going to happen is, let me look at my notes because I was a little bit prepared here. The inflation is going to go back up, and that loose policy is going to contribute to growth. So, you had a little recession scare, which I've been telling you can't happen because economic growth is positive. I think that economic growth is going to be even more positive as we get closer to the end of the year and next year, as these rate cuts trickle through, and as these billions get doled out. Look, today, Gerardo, as we recorded, the Feds gave $1 billion to an EV charging company, right? Like, they're handing out the money.
Here you go.
That's going to translate into economic stuff. And so what's going to happen is then the inflation is going to be, going up, and the Fed is going to have made the wrong move. So what I'm saying is the past week or so has been wishy-washy, and I expect the next couple of weeks to be so as well, just given the uncertainty. And then we can get back to some course of normal direction, whatever normal direction is in this bizarre world, right?
Listen, and let me be absolutely clear, because I don't want to be a hypocrite. I'm an asset owner, right? I have multiple properties. I have physical gold. I have, a pretty robust stock portfolio. I am the person that Jerome is taking care of. Be absolutely clear. I will benefit from having the hindsight and the good fortune and then some luck to be in the position that I'm in, where I can have assets sit, whether it's a stock portfolio or a piece of property, whatever it may be, and just watch it rise in value as Jerome hands out money to everybody. So I benefit directly from it, because I've always said, if you don't like the policy, try to find a way to profit from it. That's what all my services are kind of centered against, right? I mean, I didn't care for the Inflation Reduction Act, but I knew there were some good things in there, critical metals policy-wise, that were going to be very favorable to lithium, to uranium, to some of the other critical metals, especially in North America, is why I've preached patience with like the patriots of the world. Let that process play out. Let lithium bottom. That's happening as we speak, and just watch the turn up and watch the money go around, because as that money makes its way through the system, those top tier assets, like, the Patriot asset, those command a substantial premium in bull markets. And, again, you mentioned the Fed just handing out $1 billion. It's batshit crazy when you think about it. It's $1 billion. And we talk about $1 billion like we gave a $5,000 incentive to a family of 6 or something. Meanwhile, politicians are arguing 40 days from the election about a $6,000 child credit for families, right? Think about how messed up the policies are right now. You're an EV company. You want to advance EV infrastructure in this country. You're a corporation. You got great lobbyists. Here's $1 billion. America. You got to fight for your $6,000, baby. That's where it's at. This is the America we live in, folks. And if you think either party is going to solve that for you, I got news for you. It's not going to happen. The best thing that everybody can do is wait for the young kids to get in there and burn the whole shit down and redo it the right way. And in the meantime, you can try to profit from this craziness, because be absolutely clear, it's madness. 34 trillion in debt, headed to 35. The interest. We now have a global conflict that I warned a couple of weeks ago that gold and the dollar and the overall indices were telling me it looks like conflict is about to kick up a little bit more. I don't think it's a coincidence that the dollar almost breached the 100 level. It almost got to, double digits. And as soon as everything broke out, with Iran and Israel here, now we're back almost at 102, while gold is at near all-time highs. Silver's breaking 32 and copper's at 440. There's a direct correlation between all that. The reason the overall indices are doing well, tech stocks are selling off, but the defense stocks are popping because they know what's coming, right? And again, I'm not being partisan here. This is just facts. This de-escalation through escalation that Israel is doing, and I'm going on a rant now, it's just fucking war. That's all it is. There is no de-escalation, right? It's outright. They bombed a school today, and like 22 people died. They were targeting one guy. But meanwhile, a month and a half ago, your intelligence services and your technology is so advanced that you literally pinpointed people in different places at different times and just picked them off one at a time. So you're telling me we got to bomb entire regions. You're telling me we got to displace an entire region of people just to go get one guy or two guys or one group or another group. And then again, I'm on the human side on this one. I want all humans to have a chance at upward mobility. I want all humans to not be afraid to go outside because a bomb might fall on them, on the Israeli side, on the Palestinian side, on the Lebanese side, on the Iranian side, on the American side. I'm just for humans, y'all. And if that's a controversial take, it's a controversial take. But yeah, I say all that to say you profit from the madness, but the madness isn't going anywhere. It's going to get more bizarro.
Everything's a controversial take these days, Gerardo. You guys are so sensitive, as Eminem used to say. I took some notes there because a couple of good things came out. So Of course, the government is going to give money to everyone, but the American citizens who need it most, right? So you were talking about the child tax credit or the family tax credit, six measly $1,000, right? Relative to what we spend on everything else. And so I was thinking back to the cancer moonshot I was talking about a couple of weeks ago,
Yep.
right? Where we're going to spend, what was that, like $130 million or something?
Yeah.
And today we gave $1 billion, 10 times that, to one single EV charging company, right? So that's sort of the juxtaposition there. What else did you say? And that happens routinely, right? So just things that I saw like recently. This morning I saw an article they were given $120 million to like trap cow farts, methane gas, right? Like that's equal to a cancer moonshot in the eyes of your federal cow farts, human cancer, same amount of money, right? So yeah, it's bullshit. And then you could talk about Ukraine as well. The billions that we've sent there. I remember Biden and Zelensky and walking down shoulder to shoulder and how many billions and we were going to give them and munitions and things like that. And then I look at North Carolina and you wonder how much of it is true in this charged political climate. But I see a lot of, tweets, videos, stories coming out of North Carolina about a lack of federal aid and people banding together to do it themselves. People taking private aircrafts to deliver gas and food via helicopter, people taking heavy equipment to plow roads. And now I'll rant for a second because that's what it always was, right? Like you always had to be in the outsider club because you were never in the insider club. Like, it's been that way for a long time, right? And it's always been the community aspect that you needed to secure if shit was really going to hit the fan. Again, I said it last week. I'll say it again this week. There's a reason I'm broadcasting this with you from 43 secluded acres that are gated and armed. And my neighbors have tools and know how to fire up wells and weld shit and solder shit and be electricians and linemen. Like, we could survive. We don't need the federal government. And I've always said, you don't need the federal government. It's sort of the driving force behind my life and behind the publications that I put out there, right? Making something for yourself that was independent of external forces, right? That couldn't take it away from you and that you weren't dependent on to get it. And that's sort of how I continue to live, as a sovereign individual, an outsider, an independent person who does things on my own. I'm going to keep ranting. Sorry. Nate Silver's out with a new book where he's sort of, and Keith McCullough was talking about this book where he describes this dichotomy. So Nate Silver is a sort of a student of Daniel Kahneman, who wrote the book Thinking Fast and Slow, which I was talking about recently on this podcast. Nate Silver's out with a new tome. It's like this thick, which I'll have to listen to or get. And he's talking about people being like in the river, right? Like you and I are in the river. We're not fucking lobbyists. We don't have lobbyists. We don't want lobbyists. We don't care what the Fed does. I mean, we care, but only because of how it affects what we're doing sovereignly, right? We're not dependent on anybody. We don't have pensions. We're not defense contractors. We're not inside the Beltway. We're in the river doing our own thing. And that's the people that we serve. That's the people that we cater to. And then that's why we have these businesses, not for, retail investors, but for self-directed investors who want to manage their own money and make their own decisions and insulate themselves and their families from the inflationary and policy pressures of your dumb fucking government, no matter what color is in office, no matter what color tie they wear, right? And so that's just a bit of a rant there for me. I don't think I had much else to say there. I was going to pivot to the Longshoremen, actually, because, you got this strike going on and you were talking about, you got to wait until these kids come up. Well, the kids are 40 years old, Gerardo. Like, I'm the oldest millennial. The kids are here. J.D. Vance was on the vice presidential stage this week, seemingly wiping the floor with Mr. Walz.
He beat his ass.
And
Yeah. Sure.
So this is the fourth turning, Gerardo. J.D. Vance is an elder millennial. Like, they are here and they're here to tell you, no. Like, this is not. You saw the meme going around of Vance looking like this.
Yeah.
Yep. That's what it is now. And I think that's what's going to happen with these longshoremen. You said you were making the analogy of the Fed and how people inside the Beltway are dependent on them and the lobbyists. Well, the longshoremen are no different. And for a while, you couldn't say that, right? Like, these are C students that are dependent on labor collusion to have their livelihood, right?
Sure.
And there should be some backstop, some safety net in society in America. But what they're doing is extortion. And so somebody needs to say that, and people are starting to say that. Like, you guys, a 77% raise or a 70% raise over the next 5 or 6 years, plus no automation. Like, that's extortion. And for that guy with the goatee to get on the camera and say, we're going to cripple you. It's like, fuck you.
Yeah, the fuck you are.
You're not going to
Yeah.
cripple my country and my
Yeah.
family. Like, that's
Yeah.
not what's going
Yeah,
on.
yeah.
Like,
We'll have
no.
robots in this motherfucker
Well,
next month.
and that's where I'm
doing
going,
everything
but-
5 times as fast, motherfucker. Keep playing. Say
Coming to
Candyman
my
3
point.
times.
So now I'm coming to my point, right? Last week I was saying, and we were saying how in the fourth turning, solutions become so simple and elegant where they were so complex before. And it's like, yeah, this guy who's got a $6 million mansion in New Jersey, who makes $800,000 a year, is telling me he's going to cripple me because he wants his fucking guys, to make 70% more. Fuck you, man. I know people that'll do that job for 70% less, if not just automated entirely. And so look, this is America, this is capitalism, and this is 2024. You don't want to do your job and you want to extort us for higher pay. It's like, no, man, like there's plenty of people that will do that job. And so that's what I mean by simple solutions. And then just one on my fellow man, because I'm a bit ranty today. I've seen the pictures of the empty store shelves in Costco. You know, they're running out of toilet paper, just like they were in COVID. And I think to myself, one, you think they're importing the fucking toilet paper? Like, you think that's what's coming into the ports? You're going to think they're going to run out of toilet paper? That shit comes from pulp and paper waste in the U.S., you dumb fucks. Second of all, like, I would be trying to secure calories. Like, what are you going to be shitting out if you're not getting any food? Like, just think about it a little bit better.
These are the times we live in, folks. There's a young lady who is due. We have ACL music festival here in Austin every year, right? You get over 120 bands, all sorts of acts. I'm excited to see Sturgill Simpson. I'm excited to see Kehlani. I'm excited to see that Mexican OT. Diverse range of musical taste on this side of things, right? But there's a young artist who I'm not sure if she's still coming because of the recent uproar, but she was scheduled to come, and it was highly anticipated. Chappelle Roan. I'm not sure if you're familiar with the little controversy that broke out. So she is a 26-year-old artist who's very outspoken. I'm not familiar with a lot of her music. I've heard some of it. I don't do a lot of the radio stuff. So not endorsing the music or not endorsing the music. Couldn't pick a song if you played one for me. But I did like her recent comment. So she came out and said, I am going to vote for Kamala Harris. And then she followed that up. She did what we usually do, pissed everybody off, left and right. She said, but honestly, we deserve so much better than this. I am pretty fuck the government and fuck everything that's going on right now. I don't have a side because I hate both sides, and I'm so embarrassed about everything going on right now. She went on to say, there's no way I can stand behind some of the left's completely transphobic and completely genocidal views. Also, fuck Trump for fucking real, but fuck some of this shit that has gone down in the Democratic Party that has failed people like me and you. And that is what I mean by the youth is going to come in and go, okay, you're forcing me to make a vote that I don't really feel comfortable to make a vote for, but I will because it's having to be the lesser of two evils. But fuck you if I'm not resentful for being put in that position. And I think that's a lot of people. And I think a lot of these young kids that get counted out are going to surprise to the upside in the next 20 years as it relates to government and social policy and civics and, you know, our military. And you know, I could go on and on. Our major institutions, basically, I think are all going to get reshuffled and reworked. And I hope it's for the better. I can't foresee a situation where it's for the worse, right? So I think she's a lot of people right now. Like, yeah, okay, I'm voting for one because fuck this guy over here. Or I'm voting for Trump because fuck her over there. But fuck, the choices you're giving me, America, right now is fucking rough, right? Mm-hmm. I watched, I get most of my political news from The Daily Show on Comedy Central with Jon Stewart every Monday. One, because he's brilliant. I think he should run for office one day. He has some of the most insightful commentary and interviews, period, anyway, right? And so I like to get all of my news from there. I love seeing the post-debate reactions on the Jon Stewart show, on The Daily Show. And the one after the vice presidential debate was really funny to me because he's like, the one thing that stood out is how civil these two motherfuckers were.
I said the same, man.
Right? It's like a time before the nastiness got to where it got in politics. And again, maybe I'm too optimistic and starry-eyed, man, but maybe there's some hope that we can return to some of that, man, because this shit's getting out of hand with some of the other stuff.
I was sitting there watching it, and I told my wife the same exact thing. I was like, man, this is actually cordial, and then they're actually having a debate. I was like, these should be the two people running for president.
Yeah. Absolutely. I mean, I couldn't agree more. I couldn't agree more. So, yeah, there's hope there. Anyway, back to the markets. That's the social commentary part of the podcast. We talk silver, gold. Gold looks just as good as silver looks to me. I mean, we keep making new monthly highs, new all-time highs, new record highs. This despite the dollar index going to 102. And so if you're getting 2660 gold with the dollar index at 102 and moving higher, that's hugely bullish to me. What does that look like for you?
I mean, I think you're in sort of a transition period. Gold's held up beautifully. You've had some headwinds in the past week because of the dollar going back up, as you said, from 101 to 104 or whatever it is now. But I think that's the forest for the trees, right? If you take a step back and you look at a 6-month chart, the DXY is down from like 106.5 over the past 6 months as it anticipated those rate cuts. Again, all the geopolitical uncertainty. And so, I think gold is in a good place. I also think that you're going to get more rate cuts ahead, potentially another half point rate cut, right? I think this morning when I was writing my Thursday letter, the market was pricing in, what was it, a 66% chance of a quarter point cut in November and a 34% chance of a half point cut. So you're going to get more cuts here. Now, trees don't grow to the sky, and gold is doing its digestion and consolidation right now. But even when it breaks down, it doesn't break down, right? Like it doesn't want to go to 25 or 2,400. So gold looks really good. I don't have a lot to add there, and I don't want to rant. But one thing that I have seen and read recently is, and be cautious of the sensitivity, right? I was looking at some sensitivity, and sensitivity gets you excited, right? Because you look at the NPV and the IRR, and you look at the sensitivity analysis, and it's like, oh shit, $2,500.
Yeah.
Like, oh shit, this is the NPV. What happens is the costs go up as well, though, because we've been in an inflationary environment. And so I was looking at one company's slide deck the other day, and what I was doing is I was updating a report. So I had written a report, 6 months ago, and I was updating it, right? So what I had written had one NPV and IRR, and what they had in their new slide deck for October had a new NPV and IRR because they had bumped up the base case gold price, right? But what they didn't bump up was the capex, right? So like my capex number stayed the same in my report and in their slide, but the sensitivity went up. And so anyway, I just thought that was interesting and worth repeating while I was talking about gold.
No, absolutely. And something, for speculators and investors in our space to look at, right? You want to make sure if you're getting updates to the leverage to a rising commodity price, that you're also getting updates, to the inflationary pressures on constructing or building a mine, because that's going to affect, obviously, the cost of building it, but it's also going to affect the potential for a takeout. It's going to affect, the potential suitors. I mean, there's a project, I won't name the company, but I like the asset, and it's got a 20-year mine life, but it cost $3 billion to build and was kind of low grade, and they had a high grade core. And I spoke with management at Beaver Creek, and I said, well, how come you guys aren't taking like a smaller approach to this? Like, go to the higher grade core, even if you have less reserves, and cut your capex in half. And the CEO smiled. He said, that's actually exactly what we're doing right now, which was good to see. You're seeing companies reacting to those inflationary pressures. But yeah, absolutely. Like they absolutely got to factor that in when you're taking a sensitivity analysis and looking at face value. You can't just hype up the stuff that's good for you and ignore the stuff that went up as far as costs go. Copper, got to get your take on copper. I know we talk gold, we talk silver.
I haven't looked in the past couple of days, a sad admission. I will do so for you now.
I appreciate it. 440 right now. Flirted with 450 this week.
Needs to get, but it went to 521 in May. So let me change my duration. I mean, needs to get to 470 to get the next leg higher. That's where it was in July 24. That's where it was in April 2024. That's going to be resistance. Shied away from there, overshot that at the end of September, shot up to 470, but didn't like it, went right ahead and closed back down below it. So you need to get about 469 or $4.70 on the copper. And context is it did that on the back of the Chinese stimulus, right? So somebody was asking me about this.
Yep.
In the FP call-in, which I had last week, and the answer I gave them was, yeah, China is stimulating, and that's why this is going up. But China was also doing that back in March, I recall. I started to buy copper, I was probably talking about it on this podcast, saying, China's opening up, Shanghai index looks good, going to buy copper. But that was a false start, right? And, boys who cried wolf and all that. I'm afraid that this Chinese stimulus is another sort of false start. So I need to see real growth, is what I told that subscriber who was asking, which means a GDP print for me. And I think you're going to see that starting to go back up. That's what I was saying earlier in this podcast, as we get later in the quarter and certainly into 2025, as that free money, as that punch bowl comes back out, right? So as that $1 billion gets actually spent on those EV chargers, which, by the way, need a lot of copper.
A lot of copper. And again, I hate to, conflate war and the human suffering that war causes with, just breaking it down to a commodity price. But obviously, more shit gets blown up, the more you got to rebuild eventually, right? If we're to have a civil society. So when you have China come in with 2 trillion yuan, right? The equivalent of, I think, $262 billion US dollars injected into its economy. There's incentives on the electric vehicle side, not a coincidence that lithium stocks have rallied off recent lows and that the lithium price looks to be, perking back up as well. But, China's nimble. I wrote about this in the new issue of Junior Resource Monthly. One of the things that China benefits from, whether or not you agree with it, is being dictators, having a top to bottom economic infrastructure, meaning if I say do it, you just fucking do it, has some benefits. And then one of those benefits is you can be nimble. So the one financial stimulus that I found really interesting was they lowered mortgage interest rates, not just for new mortgages, on existing mortgages. And that's something that in America, if we're going to counterfeit the money anyway, why not pass some savings down to the everyday American that maybe, got locked into a 7-8% interest rate when rates were spiking up because of the inflation that the Fed caused. If you're cutting rates for rich people and asset owners now, why not cut mortgage interest rates for the average American and give them a little bit of a break, since insurance is going up, homeowner and car insurance and daycare and all the other stuff, the toilet paper at Costco that apparently you can't buy, like all of this stuff. I actually liked that part of the stimulus package. I think it's effective. I think it puts money directly into people's pockets. And I think, you can make a case that it discriminates against non-homeowners, but there's quite a few homeowners in America that would really, really benefit from that. So I thought that part was pretty neat.
That's an interesting idea for sure.
You want to talk about apps and water bottles?
I was going to. I've done a bit of ranting already, but sure, I'll rant some more. So the apps are getting out of control. So they have been for a while, sort of like the tipping culture, right?
Yeah.
The apps are out of control. You need one now, seemingly, for lots of things you do in life. And companies are making it harder to circumvent the appies, right? So just 2 examples from this week in my life where I was like, fuck, you got to be kidding me, man. So our oldest daughter is doing basketball. In order to get the basketball practice and game schedule and the communications from the team and the coach, you have to download the app. How did they tell you you have to download the app? They sent a fucking email. If you have questions about the app, you're supposed to email them. Just send the schedule via email, man.
Fucking insane.
And then the other one was, I told you I went to buy a new car. And, before they even let you get in the car, they make you download the app for the brand of the car. So they can try to upsell you the fucking, OnStar services or whatever. And this is the funniest part, right? So I download the app and we're standing beside the car and he's like, watch, we're going to start it with the app. And I'm like, but I'm holding the keys in my hand right here. Like, we're standing next to the car. I don't need the app to start the phone, man, or to start the car, man. And he's like, come on, just do it. Just press start. I press the start and it doesn't fucking work. And we're standing there for like 30 seconds. He's like pressing it. And I'm just looking at him like, I have the keys right here, man. Like, they're right here. Like, we don't need to be doing this, man. You just get in the car and start it up. And so I was just frustrated with the apps, man. It's just so contrived. And like, they funnel you into it, man. Like, oh, you got to download this app. Anyway, I hate that shit. And I think it should reverberate the other way. And then the same thing with the water bottles, which I know I'm late to, and everybody's done the Stanley water bottle memes and all that. But it has gotten out of control. If I open up the cabinet above my microwave, there's like 40 water bottles in there. And these are not low price point water bottles, right? You think for the price point that they would be last for some amount of time, but no. And the reason I'm thinking about this is because this morning I sat down to do my work or whatever, and I hear my wife and kids, some commotion in the kitchen, and one of the kids' water bottles that we just purchased for the start of the school year, which was just a month ago, is already like leaking, and there was like water all over the floor. And I was thinking,
but
how many water bottles in the past year? How many Contigos? How many Yetis? How many Stanleys? How many fucking, well, I don't have a water bottle right here. The best water bottle is just like a Dasani water bottle, man. This fucking top screws on, like the plastic water bottle. It doesn't leak. It's fine. It's great. You know what else is the best? You know what else is the best one? The Nalgene. Remember the Nalgenes with the screw on top? I've had one for 20 years. I don't need to buy a new water bottle. And I know this speaks to the throwaway culture and the keeping up with the Joneses and the trend chasing. And what I'm telling you is it's fine just not to have the app and not to have a water bottle. And you'll be okay, and you should be okay with that.
And what I'm supposed to tell you all is to go to dailyprofitcycle.com/subscribe so you can get the opinions, thoughts, rantings, ravings, and insights of not just Mr. Hodge and myself, but all of our talented editors on the site. Lots of good stuff, crypto, tech, commodities, biotech, cannabis stocks, you name it. There's probably some information there for you, completely free, completely independent. So for those of you that like independent information, and you like free stuff, you get the best of both worlds. Go to dailyprofitcycle.com/subscribe, and it'll go straight to your inbox every day. Anything else on your mind, Mr. Hodge? I got to say congratulations to Q2 Metals, man. I mean, we helped finance that company, I think, a month and a half ago. We offered it to our subscribers of private placement Intel. We did that financing at 25 cents. It came with a half warrant. And, here we are, less than 2 months, and we're up some 200% plus on that. The stock closed today at $1.13. That stock is headed much higher. The results that Q2 put out this past week are absolutely phenomenal. And I remember, and listen, let me be transparent. It's a different project, but once upon a time, about a year ago, we did a promotion on Q2, and because of its proximity to Patriot and it being in James Bay and sharing a lot of similar management teams and VPs and exploration people. I just posed the question. It was a hypothetical. I took some shit for it. And I said, is Q2 the next Patriot Battery Metals, right? And a lot of it wasn't just premised on the MIA project. It was premised on the team. It was premised on the network. It was premised on the ability for that group of people to maneuver in the James Bay region and find something of significance. Well, sure enough, they just drilled 215.6 meters of 1.69% lithium. Yeah, Q2 might be the next Patriot Battery Metals. That promotion turned out to be spot fucking on, so no apologies on that end. The question was posed, and it's starting to be answered, and the answer looks to be a yes. And now I'll remind you, still love Patriot. The group still owns quite a few shares, obviously, but I'll remind you that the infrastructure at Q2 is top-notch, and so a lot to like there. Kudos to Alicia. Kudos to Neil, the entire team over there, doing a phenomenal job. And look, we're waiting on a 347-meter intercept. And if the consistency in the grade holds up, 347 meters of potentially 1.5 or 1.6% is absolutely world-class. I should remind folks that within that 215.6 meters of 1.69% lithium, it's a high-grade interval of 64.6 meters at 2.29% lithium. So just for context there, again, that's as good as it gets in the lithium world. There is still plenty of room for Q2's market cap to increase in value, especially as the lithium spot price is starting to firm up. And if we get that 20% move before year end that Citi was calling for in the lithium price, we could be off to the races some more. This might be just the beginning of a run. So that's your freebie for the day. I know we keep talking about not talking about stocks. I can't help it. It's a time, and you don't get those kind of intercepts every day. You got to highlight that one, even if it's a freebie.
That's a good one, and I'm going to add on to that. I know you were trying to wrap up here, but give me 2 seconds.
Take your time.
I just want to connect a couple of dots. So that was a 45-cent stock in September. That was $1.15 stock today on the back of that news. So more than doubling in just less than a month. Speaking to the explosiveness of the junior mining sector, and that comes when lithium sentiment's at a bottom. I mean, they're starting to improve a little bit based on some of that money we were talking about earlier, the Fed's handing out, et cetera. And I was writing a little bit about like the lit ETF today starting to catch a bid. But anyway, this run comes with lithium sentiment pretty close to a damn bottom. So it will be exciting to see how that goes as the lithium sentiment improves and as those additional assays come out. It also speaks to how lucrative private placements can be. Yes, we just financed it a little bit ago, but we also financed it a couple of years ago at low prices, 12.5 cents. Correct me if I'm wrong, with some warrants as well. And the warrants really add up, right? So you just said we financed it last month with warrants. What were those warrants at?
Ooh, great question. I want to say 50 cents.
That doesn't matter. There you go. While you look it up, I also had 60-cent warrants from another previous financing, right? And so if you can call your broker and say, buy me X amount of shares at 60 cents and they're worth 100 and they're worth over $1, right? Then you can do the math, right? You make 40% with one single phone call if you have those warrants in your pocket. And now I have to brag, which I don't really like doing, but sometimes you have to sell. So as I was driving home in that new car the other day, I had the little GPS up and I was pulling into my driveway and my pond was like on the screen of the car. And I was like, I own a pond that I built and it's showing up from space satellite imagery on the dash of this new car. That's pretty fucking cool, man, because that pond wasn't there when I first moved here. I had to spend a lot of money to build that pond.
Yes, so you did.
I started thinking about private placements, right? Like, where do you think the money came from to build a $75,000 pond, right? Like, sold some stock that I was in a private placement. Same with buying the new car, right? And I hate to do that because I'm not like the look at my new car and pond guy. But, you know, this is what we're all chasing, right? Like, this is a capitalistic system. We all want our bottom line to expand. We want to take the best care of our families that we can. We want them to live in the nicest digs and have the nicest car and have the best experiences, right? And for me, and I'm pretty sure for you, I've been able to do that because of private placement. So you were just talking about Q2 while you were. I reached around and I pulled this paperwork down. I'm going to cover up the name so you can't see it. But, you know, this is a 50-page subscription document. It's actually 53 pages that you and I both filled out this week. Then we sent to a uranium company that we're going to finance for 11 cents. And the last time we did that with the same group was at 15 cents. And then it got bought out at, I don't know, something like 50-cent equivalent. And then that got bought out again at a 70-cent equivalent. And we financed it again along the way and had multiple batches of warrants. And I was just telling you before we started recording this podcast that I just sold my last batch of shares from Encore Energy, which I got as a result of that just a couple of weeks ago, right?
Yeah.
So anyway, they really do move the needle if you're able to participate in them. And so that's the service we provide. Like, we do a lot of things. And maybe next week we can spend some time running down Resource Stock Digest, Daily Profit Cycle, what exactly it is that we do. But at the highest echelon or the highest tier of service, it's looking at and vetting private placements that we're personally providing capital to in an effort to multiply that capital. And we invite you to participate alongside us in those deals just by becoming a member of Private Placement Intel. So anyway, I did want to talk about Q2, so thank you for bringing that up, because that was a heck of a run, right? I mean, and that's why we have the shares.
It might just be getting started. Definitely. Right. And just to answer your question, we were right on both fronts. It was at 35 cents, that warrant for the flow-through unit, and it was 50 cents at the charity, for the charity unit. So, yeah, I mean, 25 cents with 35-cent half warrant, and your shares are sitting at $1.13, $1.15, and probably headed a whole hell of a lot higher with that 347-meter interval. Probably headed to $2 in really short order. That's good work if you can get it. And again, even if you just pick an amount, $20,000, right? You go from 25 cents to $2. That gets material really quick. And if you can do that in a couple of months, it's not always going to work out that way, but that'll take care of a lot of the ones that don't make it or the ones that just don't work out, as is the norm in our business, right?
No, 100% true. I mean, I have a friend who's a business owner. He started doing these in the past year. Some haven't worked out for sure. He just sold one for a 50% loss. But guess what? You know, he was in some that he's up 4, 5, 6 times his money on, right? That have more than covered those.
Absolutely. That's all I got this week, Nick. Anything else? I love it. Sir. I'm Gerardo Del Real, along with Mr. Nick Hodge. This was the 287th episode of our weekly therapy session that we call Investing in Bizarro World. Be safe out there, everyone. Be kind to each other. Dodge the bullshit. Embrace more of the good stuff. Have a great time.
Or wipe it with the toilet paper. See ya.
Take care, y'all.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.